Small business owners often using car for work, and to get the most deduction in your year-end tax return, let's get familiar with different tax treatments for this issue. But first, it is important to identify the entity of the business. If the vehicle is in the name of the company, the expenses incurred like insurance, depreciation, fuel, and REGO are basically 100% tax deductible, but the fringe benefit tax needs to be considered. This video will not go into more detail on the FBT, so please feel free to contact us if you have any questions about it. Then if the car is operated under a sole trader or partnership entity, we need to consider the following issues when dealing with tax. If the vehicle is provided for employees, all expenses incurred are tax deductible, please taking FBT into account. And if the vehicle is provided for the use of the owner, there are often cases where the vehicle is used for both private and business purposes. The expenses of the business part of the vehicle are tax deductible. This is where we need to use a logbook to calculate the business use portion of the expenses. Basically, if we do not have a complete record of logbook, we can simply claim up to 25% of all vehicle expenses. If we need a more specific percentage of the business use portion, we need to use the logbook to keep a record of vehicle usage. There are two ways to calculate the business use portion of a vehicle through the logbook: the kilometer rates method and the actual cost method. Around May each year, the IRD publishes the kilometer range for the previous financial year. The range rate for the fiscal year 2022 is shown in the chart. The Tier 1 rate is applicable to kilometers within 14,000 kilometers. If the annual mileage exceeds 14,000 kilometers, the Tier 2 rate will be applied to the excess mileage. The advantage of the kilometer rate is that there is no need to keep all relevant invoices, but the expenses do not include the GST, and the logbook requires a detailed record of every use of the car. It is suitable for specific business travel situations, such as the use of a vehicle in the management of a rental property. If we use the actual cost method, the actual usage of the car must record for 90 consecutive days in logbook. Record the number of kilometers consumed by the car for each business use, and finally, the total mileage for 90 days is calculated. So, we can work out a percentage that is the proportion of this car used in the business in this consecutive 90 days. All vehicle-related costs can be deducted from the business based on this percentage. The advantage of the actual cost method is that the GST is included in the cost, and logbook only needs to record the percentage calculated after 3 months. And if the percentage of vehicle use in the business does not vary by more than 30%, this percentage can be used for 3 years. After 3 years, it needs to be re-recorded for 3 months. However, it is necessary to keep all types of relevant invoices for 7 years. This is suitable for businesses where there is a large mix of public and private use of vehicles during the year. One thing to note about the above two methods is that the journey from your business to your home will be treated as private use of the vehicle. If you work from home, then the journey from home office to work is considered as business use. Thanks for watching. Please contact us and book a free initial consultation to understand more about your motor vehicle expenses deduction.